XRP news script. Simplified version. Every time the market goes up and down, there's always a moment where regular people panic while big companies stay calm and make smart moves. And right now, that moment is happening right in front of us. While normal people are selling their investments because they're scared, the biggest players in the game are quietly buying more and more. History shows us over and over again, when regular people sell at the bottom, big companies buy with both hands, and then regular people come running back way too late. This same thing is happening right now with stocks, Bitcoin, and yes, even XRP. This is not advice about money. Look at what's happening. Regular people just sold almost $1 billion worth of stocks in crypto in 2 weeks back to back. That's after buying steadily for almost 9 months. And guess what happened that same week? Big companies bought $1.1 billion worth. Their longest streak of buying since the scary market in 2022. Think about that. While everyday people are taking their money out after a small jump up, smart money is quietly getting ready for what comes next, a flood of new money. And this is where most people miss it. Because they're not studying how much money is in the system. They're not looking at money cycles. They're not paying attention to what the Fed is planning. Instead, they're reacting with their feelings, taking profits way too early, just like we've seen countless times before. But the money supply has already been pushed forward 18 months. Rate cuts are coming. More money is on the way, and the big companies know it. They're stepping in early while regular people get left behind. Now, before we keep going, let me quickly say this. If you want to position yourself the way big companies do, you need the right tools and knowledge in your hands. That's why I put together the Ultimate Millionaire Eye. Investor Guide, Find 100x Stocks. It's packed with documents, pictures, videos, and more, breaking down exactly how to spot amazing opportunities before everyone else that I've pinned in the comments section below this video. Check it out and don't miss it. Back to the facts. When you zoom out and really look at this from a big picture view, it becomes crystal clear why selling now is the single biggest mistake most people could make. Because every single time the Fed has changed direction in the past, cutting rates, making money policy easier, the result has been explosive upside. Just go back to November when the Fed first moved. Markets shot up hard, pushing into new highs by January. That wasn't an accident. That was money at work. And it's happening again. So ask yourself, do you want to be on the side of scared regular traders? Or do you want to be on the side of billion-dollar companies loading up while everything is still cheap? Because the choice you make right now could define your returns for years to come. Cathie, what has been one of the loudest voices talking about this exact setup. She's calling Bitcoin a once-in-a-lifetime scarce asset, a protection, a new technology, a brand new type of investment unlike anything before. She's not talking about Bitcoin going back to $30,000 or $40,000. She's predicting $1.5 million over the next 5 years, and she explains 3 reasons. Replacing gold, big companies adopting it, and demand coming from developing countries where people desperately need protection against having their money taken away and inflation. And she's not alone. Look at how big funds, retirement money, and investment managers behave. For decades, they ignored Bitcoin, treating it like a weird idea. But now, it's becoming impossible to ignore. ETFs are live. Safe storage solutions are getting better. Rule-following systems are being built. The same foundation that allowed gold to go mainstream is now being used for Bitcoin and crypto. Once big companies really open the floodgates, supply and demand will get crazy because unlike regular money, there are hard limits on how much can be made. Take Bitcoin supply, 21 million maximum. We're already at almost 20 million, mind you. That scarcity alone in a time when everything else is being watered down is like a magnet for money. Add in the fact that AI and robots are making other things less scarce, like jobs, and it becomes obvious why markets will chase the few things that still have it. Bitcoin stands at the very top of that list. But here's the part most people don't fully understand. Bitcoin is not just digital gold. It's both a safe and risky investment. It moves during scary times just like gold. But it also goes up with tech because it's part of a brand new money system. That double nature gives it a completely different edge compared to anything else in markets today. During the Greek crisis in 2015, when fears of leaving the EU were everywhere, Bitcoin shot up every time headlines got worse. Fast forward to the U.S. regional banking crisis. It played the same role again, offering safety when trust in traditional banks failed. At the same time, it acts like a tech investment, benefiting from growth cycles, innovation, and money flowing into digital assets. That's why it calls it a big idea. It's why big companies are circling around it. And it's why regular people panic selling right now is giving them exactly what they want, cheap supply. Meanwhile, let's not forget what's happening in other parts of the market. Oil prices dropping as sharply as they have represents one of the biggest hidden tax cuts for consumers we've seen in years. Lower energy costs spread through the entire economy, cushioning inflation pressures and setting the stage for a much better backdrop for risky investments. It's something very few people are paying attention to. But it matters hugely. The US dollar, too, is at the center of this. Yes, it's been weaker in recent weeks, but zoom out and it's still holding strong historically. If less regulation, tax cuts, and tariff reductions happen, the return on money in the U.S. compared to the rest of the world shoots higher. And that's good for the dollar. Remember the Reagan years? The dollar became so strong back then, the world had to work together just to bring it down through the Plaza Accord. That wasn't weakness. That was dominance. And we could very well be setting up for another cycle like that. And here's the kicker. The Fed is trapped. They've already shrunk the money supply more aggressively than we've ever seen. But as growth slows, pressure builds, and the political cycle heats up, rate cuts become inevitable. That means money injections are right around the corner. Money is fuel. And every single major move higher in markets over the past century has been powered by exactly that. So when you look at regular people dumping their holdings after a small bounce and big companies scooping it all up, you can see the game being played right in front of you. It's the same game that's been played over and over. The only question is which side of it are you going to be on? And that brings us back to the point. Bitcoin, XRP, gold, and even stocks are standing at the edge of a money surge. The signals are flashing, the big companies are moving, and regular people once again are on the wrong side of history. When you strip away the noise, what we're seeing today is a perfect storm of things that could change the path of not just Bitcoin, but the entire crypto and stock world. Because make no mistake, these markets are more connected than ever before. The same money that lifts the SP 500 is the money that fuels Bitcoin's next leg higher. And the same big company money that used to sit on the sidelines is now beginning to spill over into digital assets at a huge scale. The difference this time is structural. In past cycles, Bitcoin moved largely on guessing. Small regular traders, groups of rich people, and a few adventurous funds were the ones driving up and down moves. But today, you've got publicly traded companies with Bitcoin on their balance sheets. You got ETFs approved and trading on major exchanges. You got country wealth funds exploring allocations. That's not guessing. That's systematic integration. This integration is why big company buying is so powerful right now, because they're not treating Bitcoin as a gamble. They're treating it as a necessary protection, a portfolio diversifier, and in some cases a core holding. That mindset is entirely different from the early days. And when big companies commit, they don't play small. They don't dollar cost average a few $100s a time. They move with billions. Now, think about this. Bitcoin supply creation is on a mathematically declining schedule. Halvings cut the flow every 4 years, reducing new supply just as adoption grows. The next halving is not years away anymore. It's right around the corner. Every cycle before has shown the same pattern. Supply squeeze plus demand surge equals massive repricing. And this time with big company involvement at a level we've never seen before, the size of that repricing could be bigger than all previous cycles. But let's broaden the view beyond Bitcoin for a moment, because what's happening with XRP, Ethereum, and other top-tier assets is just as important. XRP's unique role as a bridge currency for cross-border payments positions it in a completely different category than Bitcoin. While Bitcoin is global digital gold,